Hello students, nice to meet you back. So today we will continue problems on determining increase or decrease in working capital. Student, this is a very brief answers that I've given you. This is the fourth problem. State with reasons whether the following transactions results in increase or decrease or results in no change in the working capital. Bills receivable 65,000, discounted for 63,400. So discounted here means the BR is pledged with the bank. So the bank comes forward to give the instant cash by taking BR as mortgage. So 65,000 BR goes, 63,400 cash comes. So it's a transaction between the BR and the cash. So when you look into 65,000 BR goes, 63,400 cash comes. So there is a net decrease in the current assets of 1,600. So BR is a current asset, cash is a current asset, but there is a decrease in the net current asset of cash 1,600. So working capital decreases. Fixed assets 5,70,000 sold. So fixed asset goes, cash comes. So there is an increase in cash, working capital increases. Short-term loans raised. It's a loan taken from bank. So it's a transaction between a short-term loan and cash. Short-term loan is a current asset. Cash is a current asset. Current asset, there is no change. Issue of shares 10 lakh against fixed assets. Shares are issued against purchase of fixed asset. So fixed asset is a non-current asset. Share is a non-current liability. So non-current, no change. Bills 60,000 accepted. You accept bill from creditor. So the two accounts affected are BP and creditor. BP current liability, creditor current liability, therefore no change. So next question, students. So students, this problem has come for 2018. So the first point, a company issued 5,000 shares of rupees 10 each at par. So it's a transaction between the shares and the cash. So shares are issued and the cash is received. So there is an increase in working capital. Debenture of rupees 1 lakh are converted into equity shares. Equity shares and debentures are the two accounts that are affected. So it's a transaction between non-current items, no change. Long-term investments were sold for rupees 5 lakh. So investments are sold, cash is received. So increase in cash will result in increase in working capital. Fixed assets purchased by issue of shares for rupees 1 lakh. So shares are issued against purchase of fixed asset. So fixed asset non-current, share is a non-current, so no change. Cash paid to creditors 50,000. It's a transaction between creditor and the cash. Current and current, no change. Prelim expenses written off 10,000, no change. The reason is the two accounts that are affected in this transaction is prelim expenses account and the PL account. So prelim expenses and PL both are non-current, therefore no change. Advance income tax paid. You pay cash. So the two accounts are income tax, advance income tax and the cash. Advance income tax is nothing but prepaid, paid in advance. It's a current asset. And you pay cash, current asset. So advance income tax, current asset. Cash, current asset, no change. Bad debts written off during the last year, recovered rupees 1,000 during the year. So recovery of bad debts is treated as an income. The bad debts that was treated as a loss some years ago is received or recovered during the current year. So when bad debts occur, it's a loss. When you recover, it's a income. So the transactions are income and cash. So when you recover bad debts, cash comes, so working capital increases. Bills receivable of rupees 40,000 was discounted for 38,000. So the BR is pledged with the bank. So bank offers you instant cash by mortgaging the BR. So 40,000 BR goes, 38,000 cash comes. So BR current asset, cash is a current asset. Both are current, but 40,000 BR goes, 38,000 cash comes. So net decrease in current asset is 2,000. So therefore decrease in current asset will result in decrease in working capital. Dividend paid 50,000. When you pay dividend, cash goes out. The two accounts that are affected is dividend account and the cash account. So when you pay, cash is going out, so working capital will decrease. So this is the sixth question, students. Issue of share capital for cash. Shares goes, cash comes, increase in working capital. Redemption of debentures worth rupees 20,000. Redemption of debenture means we call repayment of debenture. So when you repay, cash goes out, so working capital decreases. Investment rupees 30,000 were sold for 45,000. So investment goes, cash comes, so working capital increases. Fixed asset purchased by issue of shares. So shares are issued against purchase of fixed asset. So fixed asset non-current, shares non-current, no change. Cash paid to creditor 30,000. Cash current asset, creditor current asset, both are current asset, no change. Bills receivable 8,000 discounted for 7,500. So BR 8,500, sorry students, BR 8,000 goes, cash 7,500 comes. So both are current, but 500 rupee there is a decrease in cash. So decrease in cash will result in decrease in working capital. Goodwill written off 5,000. So it's a transaction between goodwill written off account and PL account. Both are non-current, no change. Advance income tax paid. Advance income tax is a current asset. When you pay cash, cash is a current asset. So both are current, no change. Raw material purchased worth rupees 5,000 on credit from X Limited, no change. Raw material here we mean stock. So when you purchase stock on credit, the transactions are stock account and creditor's account, because you purchase on credit, not for cash. So creditor comes and stock occurs. So it's a transaction between the stock and the creditor. Both are current. Stock current asset, creditor current liability, current, no change. Paid 1,000 towards cost of issue of shares. So the two accounts that are cash and share. So share is a non-current, cash is a current. So when you pay, cash goes out. So working capital decreases. So this is the last problem, student, that has come for 2019. A company issued 10,000 shares of rupees 100 each at par. So it's a transaction between shares and the cash. So shares go, cash is received. So working capital increases. Cash paid to creditors 75,000, no change. Reason: cash is a current asset, creditor is a current liability. Long-term investments were sold for rupees 10 lakh. So investments are sold. So investment goes and the cash comes. So increase in cash will result in increase in working capital. Prelim expenses written off 20,000, no change, as explained in the previous slides. Advance income tax paid, no change, as explained in the previous slide. Dividend paid: when you pay dividend, cash goes out. So decrease in cash will result in decrease in working capital. Bad debts written off during the last year, recovered 1,000. So when you recover bad debts, it's an income. So cash comes, so working capital increases. So students, any doubt, feel free to contact through WhatsApp. Thank you.